Welcome to Illuminati Silver. We tell the truth about silver. Today is Thursday, the 10th of December 2020, and we're looking at announcements made in the UK today which suggest that the economy, the British economy, may not get back to normal until at least 2022, and that's the end of 2022, as a result of the coronavirus pandemic and its after effects. And we would argue that to some extent this may apply equally across most of the Western world. So let's take a look. Now, before we look at these economic announcements, we wish to mention that yesterday we published our gold and silver midweek financial update. That is the 9th of December. Which did not go out until quite late. So if you haven't had an opportunity to listen to it, we've provided links below as they suggest what we think is going to happen to gold and silver throughout the course of this week. And so far, we seem to be reasonably accurate. Now today, the Office of National Statistics announced that the UK growth will not adequately recover until at least the end of 2022. And the Confederation of British Industry, which is an employment industry organisation representing hundreds of thousands, if not millions of workers, also issued an announcement more or less supporting this assessment. So let's take a look at both of these articles published by Reuters earlier today. Reuters article, UK GDP growth slows to 6-month low as COVID hits hospitality. Britain's economic recovery almost ground to a halt in October as a surge in coronavirus cases hammered the hospitality sector, adding to the chances that the economy will shrink over the final 3 months of 2020. Thursday's official data showed the economy lost momentum as public authorities in much of the United Kingdom barred people from socialising in pubs and restaurants, ahead of a broader 4-week partial lockdown across England in November. Gross domestic product rose 0.4% in October after expanding 1.1% in September, the Office for National Statistics said, the weakest growth since output collapsed in April during the first lockdown. A limited rollout of a COVID vaccine began this week in Britain, offering hope for a rebound in consumer spending in 2021. But many businesses will face new headwinds from trade restrictions with the European Union that come into force on January the 1st, when post-Brexit transition arrangements end. Prime Minister Boris Johnson and the EU's chief executive, Ursula von der Leyen, have given themselves until Sunday to seal a new trade pact that would limit some of the damage after failing to overcome persistent rifts at a meeting on Wednesday. The economy continued to grow in October, but at a snail's pace, and with the COVID-19 restrictions likely to remain in place for some time, the economy is in for a difficult few months yet, Ruth Gregory, economist at Capital Economics, said. Britain has Europe's highest death toll from COVID-19, with more than 62,000 fatalities, and also suffered the biggest economic hit of any major economy after GDP shrank by an unprecedented 19.8% in the second quarter of this year. Output in October was 7.9% lower than it was in February, before the pandemic struck Britain's economy, and 8.2% weaker than in October 2019, the ONS said. Government forecasters do not expect the economy to regain its pre-COVID size until the end of 2022, and the Organisation for Economic Cooperation and Development predicted Britain's recovery would be weaker than anywhere bar Argentina. Although the economy picked up rapidly after the initial shock of the lockdown, it lost momentum as COVID cases started to rise again in September and accelerated in October. Government restrictions that largely barred Britons from socialising with people they did not live with led to a 14.4% fall in output across the accommodation and restaurant sector. Most economists think GDP fell outright in November when the British government imposed a 4-week partial lockdown in England, closing non-essential shops and hospitality venues, and similar measures were imposed elsewhere in the United Kingdom. The decline is expected to be more limited than in the first lockdown, when restrictions were tighter and businesses had less time to adapt. Economists at Morgan Stanley forecast a 3% fall in GDP for the fourth quarter and said they expected the Bank of England to cut rates to zero from their current 0.1%, possibly as soon as next week if Brexit trade talks collapsed. End of article. Reuters article, dated December 10th, 2020. Headline: UK economy won't recover from COVID until end of 2022. CBI, which is the Confederation of British Industry. Britain's economy is unlikely to return to its pre-COVID size until the end of 2022, and unemployment looks set to rise sharply in the first half of next year, the Confederation of British Industry warned on Thursday. The CBI estimated Britain's economy would shrink by a record 11.1% this year as a result of the coronavirus, before growing 6% next year and 5.2% over the course of 2022. Unemployment is set to peak at 2.51 million people, or 7.3% of the workforce, in the second quarter of next year after the end of a government furlough program. Quote, "We simply must find new ways to get businesses investing at the start of 2021 if we're to fast forward the recovery," unquote, said Tony Danker, the CBI's new Director General. The CBI's growth forecasts are broadly in line with those from the government's Office for Budget Responsibility last month, which also predicted a slow recovery as Britain faces added challenges when a post-Brexit transition ends on January 1st. The CBI said that even if Prime Minister Boris Johnson agrees a trade deal with the EU to avoid tariffs, the government would have work to do to give clear guidance to businesses and to ensure border arrangements ran smoothly and that there was temporary flexibility on issues such as EU data rules. The government need to demonstrate the same agility and resource allocation as they did with COVID, Danker said. A failure to reach a trade deal would leave the economy 1% smaller at the end of 2 years, even if the government offered some support to soften the blow, and cause further damage over the long term, the CBI estimated. To boost growth, the government should temporarily subsidise business investment in productivity-boosting technology and scale back business property taxes, Danker said, describing pent-up demand as a coiled spring. End of article. Having seen that this week the jobs data in the US has also worsened, with a higher jobless claims report being announced today, and concerns expressed by the Fed for the need of additional funding and stimulus, the writing is on the wall, so to speak, certainly as far as we're concerned. The issue, of course, is to what extent will a slower recovery affect both the value of the US dollar or sterling and its impact on gold and silver prices, which currently stands at $1,835 for gold and $23.98 for silver. Now, we suspect this is the stimulus packages and the additional support, and of course, if the UK does reduce interest rates to 0%, will act as a tailwind. But fully accepting that silver's price will be adversely affected by an additional drop in industrial demand until that engine starts to drive forward. And so investors will have to hope that the monetary demand for gold and silver will outweigh the industrial demand for silver. And only time will tell whether that proves to be the case or not. What's your opinion? Do share your thoughts. Meanwhile, thank you so much for listening. And if you haven't already done so, please subscribe to this channel. Not forgetting to press the bell sign so you're notified of our videos as and when they are published. And for those of you interested, we've published a video today on the Richard and Greg channel asking what will a Biden presidency look like moving forward, of course assuming that he is ultimately inaugurated on the 20th of January of next year. Thank you once again. We hope you have found this video interesting and informative, and if so, please give it a thumbs up and share it on social media. Please ensure that you have subscribed to our channel and press the bell sign so that you are notified of any future videos. Also, kindly visit our website at illuminatisilver.com, and if you haven't already done so, please subscribe either as a free or paying member for regular email updates and offers. Disclaimer: Illuminati Silver owners come from a background of banking, international wealth management and economics. Having now retired from these worlds, we are not qualified to give investment advice. Therefore, this and other productions must not be deemed to be giving such advice and merely represent the personal views of its owners.